Well, I believe there will be more stimulus measures coming on board because, well, we do see some very tentative signs of stabilization of the Chinese economy, but these signs are not strong enough to stand on their own feet yet. So Beijing does have to continue to err on the easing side, albeit with a cautious stance, to keep the economy from falling below their target level of 7%. So the stock market actually is trading not on growth performance, it's trading on expectation on policy easing, which in turn impact growth performance going forward. So that's what we are looking for, and I think the economy is going to stabilize in the second half of this year.
Well, that sounds fairly positive, Chilo, but overall, when you look at the market, there are signs of trouble ahead. You know, there are more than one sign, in fact, that there could well be trouble ahead. We've got the Chinese authorities warning of risks, but then, of course, every time we get a pullback, they then start to talk the share market back up again, and I think that's really key when it comes to this situation. But we've also got significant margin lending, and we've got the amount of margin financing more than quintupling over the past year to $325 billion. And you've got to add to that the other forms of debt financing, of course.
Yes, well, certainly when you look at these numbers, they look stunning. But then, as you mentioned, the margin figure was an absolute number. But when you put things into perspective, the margin trading issue in China is not really that much a concern as of now yet. For example, margin trading in China is about 18%, 20% of monthly trading turnover. Now that's way below South Korea and Taiwan's, which is close to 40%. And when you look at the whole market capitalization in China, it's about 70% of the economy. Now again, that's way below the US, 150% of the economy. The point here is that we do have to monitor this risk signpost. But then at this point, I think if one worries too much about these issues and forget about the other important issues that are supporting the rally, you know, that strategy will probably keep the investor underperformed for another at least a year.
Well, this is the thing, Chilo. I mean, it sounds like deja vu, right? If we rewind the time clock back 6 years with the Fed getting engaged in quantitative easing, at the end of the day, you keep that rally going just long enough and you might just yank other investors into it, right? Let's face it. I mean, the allocations for foreign fund managers, I hear, have been relatively low, at least in the Greater China region. If for no other reason, could they be the next trigger for the rally to have the next leg up?
Well, you mentioned quantitative easing. I think this is the biggest difference between what we see in the Chinese market today and your example of the Fed, what it did in the past. We haven't had any quantitative easing in China. QE is not needed in China. For those who are talking about this issue in China, I think they are mixing up with some basic economic concepts. Now, what we are seeing here in China is, you know, the Chinese government is using quantitative measures to ease liquidity. But this is not quantitative easing. Just take these bond purchase reports that is all going around for a few weeks now. The Chinese government is not buying bonds from the system. It is swapping bonds with the local governments. The bonds still rest on the local government's balance sheet, but not on the central government's balance sheet. So this is not QE. And what we are seeing is a combination of liquidity easing to keep liquidity from contracting further, because China has experienced a passive liquidity contraction due to capital outflow in the past quarter or two. So the easing is trying to ease that problem there to keep liquidity from contracting further. And then what we are expecting, as I said earlier, more easing to come on to keep growth from falling further, and then at the same time pushing through some structural reforms, including capital markets reforms, and allowing more foreign participation in the Chinese markets. So that's the positive spin of the market at this point.